cash generation from operations. This first line, and it's got a little 1 next to it, and we've got 2 million there. It's the first line in your operating activities. They love asking this note in finals, so make sure you understand it. Before I go there, I just want to show you something in the face. Interest, dividends, and tax. These three things we are going to be quite busy with now in note number 1. We're going to have to remove them from the amount in number 1 so that I can show them here separately, so that I can show how much money I paid towards interest, dividends, and tax. So I'll show you now. Just be reminded of them because they're in the face. I have to take them out of note number 1. You'll see now what I mean by that. First of all, profit before tax. Okay, so we're going to deal with tax in the face, and we're going to pay it in the face. So let's go to the big amount. Before tax was taken out, it was 1.2 million, and often you have to calculate this amount. Where will you find it? So let's say you've got an income statement and you've got all your income at the top and expenses. The last 3 lines is where you would find it. Net profit before tax, that's the one that you're going to use for the cash flow. And then income tax, we don't have. We only have the net profit after tax. And then always in the IAB paper, they tell you the percentage of this income tax, which was 28% for this exercise. So if I take my 885,600, I'm going to use my formula from grade 9, what do I want over what I've got, to calculate what the before tax was. You can even calculate the income tax and then just put it back in if you want to go the longer route, but I'm going to take a shortcut. What do I want? What percentage, because this is always a percentage, do I want? Well, I want the net profit before the tax was taken out. So I want 100%. What have I got? This 885 represents 72%. Because remember I said they do 28% income tax in this exercise. In your exam, it's normally about 30%, just to make the amounts a little bit rounder. The answer you then get is the 1.2 million that you could see that was in the answer. So what do I want? I want 100, which is before the tax was taken out. What have I got? I've got only 72%, because 28% of this was taken out for tax. That's why I put the 72 there, and therefore I now have my answer, which is 1.2 million. And that you're going to show in a little bracket just over here, how you calculated that. There's often some 2 or 3 marks for that. Adjustment in respect of. Now you can see there's 3 entries here, normally only 2. Normally you'll have depreciation and interest expense, but I'm going to look at loss on disposal of assets just quickly, because there's 1 or 2 exercises that you will come across that will have this in, and you never know. IAB might just want to do it for your year and add it in. So what is this? 25,000 Rand is the number that I made as a loss on my asset. It's not how much cash I got for it. So if I were to, let's draw quickly up an asset disposal account, asset of 500,000 Rand, that was the cost price. So let's say somewhere it was equipment to the value of the original cost price, obviously. Then my accumulated depreciation, I had to calculate, there was quite a bit going on there, was 275. And then my cash that I received for it was 200. And when I calculated this, I realized, oh, I am making a loss, blah, 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 on my assets, which was 25. So that adds up on both sides is 500. So this 25 is not cash. It's a loss that was recorded in your income statement as an expense. It decreased your net profit, but it had nothing to do with cash. So it's like depreciation. You're going to have to put it back. The cash was the 200, and I'll show you, we will record that in the face. But for now, I need to put that 25 back in, because I'm gonna, where am I now? Just moving this down a bit. I'm going to add it back into my net profit, because I'm going to show the 200,000 Rand cash a bit later. So I reverse the loss. If I made a profit, I'm going to minus it. The only thing that the cash flow is interested in is how much money did you get, not how much money did you make. So it's only interested in the cash. I might as well just show you right now. You'll see here proceeds of sale of a non-current asset, the selling price. There's the 200,000 rand. So they don't care if you made a profit or loss. They just want to know how much cash came in for that transaction. Okay, so if that happens, now you know. Depreciation, you purely look at what it was for the last 12 months. And often you're going to need a calculation to work that out. And that's your little note 3 that you're going to have to take apart. And it's basically, if you have to summarize it, it's the movements that's inside note 3, where it says depreciation for the year for all your assets, whatever that might have been. Put it back in. So increase your net profit. That expense wasn't really an expense that cost you cash. It was just the value of your assets going down. Then interest on expense. This one you can see they calculated for 6 months and 6 months. So they're trying to work out, okay, so what was the interest on the expense for the year? It's 135. So this amount often comes from your income statement. And then because you put it back in, so you put it as an income, you put it back into the net profit, you will, don't worry, take it out over here, 135. The amount's exactly the same because the interest is capitalized. If you notice that the interest is not capitalized, then you're going to have a little bit more action here. You're going to have a bracket of accrued interest on the expense and then accrued interest on the expense for this year, and calculate what you should have paid, and the amount here will what be the cash part. So just make sure you know if it was capitalized or not. So when you see capitalized, yay, it's easy. Both of the numbers are the same. So now I'm sitting with money, net profit, basically, of 2 million after I put all those expenses back. The loss went back in, the depreciation went back in, and the interest on my expense. So I'm jumping to working capital, which there's a separate video which you need to watch to understand when things go up and down, what happens with your cash. It's very simple. Once you get it, it's super easy. But what I do want to show and highlight here is that you don't just compare this year and last year with each other and say your cash went up or down. There's another number, this 49 got involved, this amount and that you had to take out before you could compare the 2 years with each other. So what did they remove before they compared the 2 years? They removed SARS. So if you see SARS income tax, make sure you take it out. It's not part of this calculation. Why? Because tax, SARS, is shown separately in the face. So what you'll have here is purely your debtors, like debtors control and creditors control, and then your adjustments, accrued income and deferred income and all of those. Just be careful if there is accrued expense for interest, it does not come in here. It would have sat here at the top in that little bracket I mentioned just now. Lastly, under creditors, another number they took out was the final dividend. Why do they remove it from creditors? Because it's under payables in your balance sheet. They remove it because it's shown separately. So you can see I'm repeating myself. Whatever is shown here in the face, you need to make sure you remove from note 3. So for debtors and creditors, you must have no tax in there. You must have no dividends in there. It must be clean. It must be debtors and creditors and some accrued or deferred income and expenses. And then if you add those 3, you've got your 107, and then you take those 2 amounts and you've got your answer for the face, 2.1 million. And if you go to the face, 2.1 million.